We are glad to welcome you at our Unicorn.Events shows. Today we are speaking with partner SOSV, Oscar Ramos. Dear Oscar, thank you for dedicating your time.
Hello, Elena. Kate. Great pleasure to be here today.
Hi, Oscar. As you understand, we are making short interviews with VC funds all over the world to help startups to approach the right people in the right one place.
What industry does your VC fund invest in?
So we are kind of a unique VC because on one side we don't have a specific industry focus. We invest across multiple industries, from education to healthcare to food, enterprise solutions, logistics, anything that you can imagine. We also invest globally from the same fund, so we don't have regional funds. So SOSV as a fund invests globally from North America, Europe, Asia, and really to multiple types of jurisdictions. But we have three specific areas of expertise. We focus on technologies, and we have an area on life sciences and biotech. We have another area on hardware, and then more specifically, we have another one on software. So on my side, I mostly work on the software side, both on the consumer internet as well as the enterprise software area. Although I spend a bit more time, actually significantly more time, on the enterprise software space with a global approach. Although we have a preference on emerging markets applications.
So we can say that you are geography agnostic.
We're industry and geography agnostic. Yes, correct.
Thank you so much. And what is your average check size?
We start our investment with an initial check around 150 to 200K per company, and then after that we follow on with additional investment. Our investment approach is actually a bit different than most investors, because we tend to be the first investor on a round. We normally invest in the companies when they're getting ready to raise rounds between $5 to $7 million, sometimes maybe a bit less than that. And we help the companies when they are probably still not ready for this type of funding. We help the companies develop the business through the growth of their actual sales or user base, and then we also help them to structure the company to be ready for this type of investment. So we normally are around the first ones to commit in the round, and then we work with the companies, and as they close the round, we follow on with additional investment. Or typical follow-on investment could be something that could be between 100 to 500K in that round. But we recently announced that we raised an additional fund that will be investing only in follow-on rounds for our companies, and that fund can make $3 to $5 million investments in every fund. So from that point of view, we are what we call a multi-stage corporate venture capital fund, multi-stage venture capital fund. But the multi-stage, it's only going to be happening in our own portfolio.
Have you already raised any unicorn from your portfolio startups?
So at SOSV, we have close to 10 unicorns right now, and more specifically in the area of investment that I work on the most specifically the Chinaccelerator space. We're actually the only accelerator in Asia that invested in a company that churned and became a unicorn. So that company is called BitMEX, and is actually a very interesting company as a unicorn, because it's not a unicorn based on fundraising, it's a unicorn based on revenue. So the company actually never raised any additional funding after they graduated from our initial program, and they were able to reach this multi-million-dollar stage.
Okay, thanks. So how you choose the startups to your portfolio?
So we have it's a very traditional early stage investment approach on one side. So we look at the opportunity in the market, we look at the defensibility of the approach that the funders want to bring in, but then there's a very strong element on the funders themselves. In our experience, one of the key things is that every single company that we invested in an early stage and eventually raise a Series A or they achieve something meaningful, every single company, I'm not talking about majority, I'm talking about every single company, all of them have to change their business model. All of them did raise or did achieve something meaningful with a change in the business model. So the market sometimes changes, the model of the company changes. The founders are normally the ones that normally stay, and that's where you have less change. That's why founders are so important. And you normally strengthen the founding team in the companies. You might bring in new people to compensate some of the potential weaknesses that the company might have. But that's a key element of evaluation. What probably makes us a bit more different than other VCs is we're a VC that brings in capital and also brings value add. And the value add element of what we bring is actually pretty significant for a lot of companies. In some cases, what has helped some of the companies to reach hundreds of millions of dollars in annual revenue without having to raise additional funding. So that special support is all designed to help the companies grow their business. In the case of consumer companies, the goal is to help them acquire users without having to spend money on marketing. In the case of enterprise technology companies, the goal is to help them not only acquire users without having to spend budget in marketing, but to close the contracts faster. Any enterprise deal normally will take between 12 to 18 months to be close, and we help some of our companies close those contracts in a matter of small number of months or weeks. So that makes a big difference. On top of that, as we start working with the companies, we realize that to be able to go from where they are to the doors that we can open for them, they need to fill some gaps in the company. There may be a pricing issue, there may be an operations issue, there may be a team issue, and then we're able to help them identify those challenges and then fill those gaps with the resources that we bring. So for that reason, a very important criteria in our selection process is identify if we can help companies or not. Because if we can help companies, first, the companies get more value. Second, we reduce our risk. And at the end of the day, even if we're a very active investor, and at least in the software section of SOSV, we're making around 45 investments every year, which is a large number for only two investment partners. We need to be selective because we obviously come across lots of great opportunities since we're investing everywhere in the world and we're investing almost in every single industry.
Let's talk about startup competition. It's also a way to find great startups for VCs. As an investor, what's the main criteria for you to look at when the startup is pitching?
Well, when you look at early stage, any competition or any pitch, basically is going to allow you to basically make one decision. Do I want to continue talking with this company or not? And that's the only thing that you can evaluate. So what we're trying to do in this case is, first, we're trying to understand the problem. We're trying to understand the opportunity that the company is going for. And some of the opportunities are clearly and are visible there. Like, we are familiar, you're investing in that space, you know this opportunity. But what makes the opportunities interesting is an insight. Something that when you look at that opportunity, you look at that opportunity in a unique way that maybe others have not thought. So being able to really identify if those founders have an insight on that opportunity that others might not have, that's very important. Second element that we're looking at is, okay, I agree that there's an opportunity, because if there's no opportunity, why would anybody invest in a company in that area? So assuming that there's an opportunity in that area, the second element is, okay, what makes you better than other people? What makes your approach? What makes your company? What makes you as a better investment opportunity than anything else out there? And those two elements are very important, but those two elements are basically, the first one is really, are you a good analyst? Are you good at analyzing opportunities? The second one, are you good at designing opportunities? So the third element that we look at is, what have you achieved up to now? Because one of the difference between entrepreneurs and other people is that entrepreneurs do things. Entrepreneurs try things. Entrepreneurs execute. So we want to see execution. We want to see movement. We want to see that you are not waiting to get something. We want to see that you feel a level of passion, or you think that the opportunity is so great that you are already doing things. And that doesn't mean that you need to do everything out there. It means that you need to be able to do something. You need to show belief and a movement, and you need to somehow show that the market is accepting some of your thoughts. From that point of view, that element is important to define the stage of the investment. No? So if you're targeting, like our case, a seed pre-A type of investor, you need to show that at least you have people that cares enough about your product to use it, that to pay for it, and that somehow they're happy, no? That they don't see the concept and they think theoretically the concept is interesting, but as they test it, they just churn and disappear. So we want to see at least some initial interest from that.
Thanks a lot. So, Oscar, let's talk a little bit about pitch decks. According to pitch deck, what is the most important slide in pitch deck, according to your point of view?
Well, I think the most important slide, in my opinion, for an early stage company, could be the team and the traction. But it's very difficult to evaluate a team without understanding the context of the company. So a team could be really good for one business and really bad for another business. So in general, what I'll say is the most important thing the most important characteristic of a good pitch is clarity. When somebody is able to articulate the ideas in a way that are easy to understand, easy to remember, and easy to link with each other, no? Because there's no single slide that will make anybody say, well, I need to jump into this company. But the reason why the team slide is important is because the market opportunity is out there for everybody. The design of the solution is there for everybody. The team is probably the thing that will make every single investment opportunity different.
You mentioned that the passion is very important for you. But as you know, a year ago, the founders faced new challenges, and online world, on one hand, it's allows you to pitch in front of VCs around the world. On the other hand, it is much more difficult to keep the attention via Zoom, via online, rather to do it offline. And it's much harder to show your passion to your products. That's why I want to ask you, what's the online pitch tips you can provide with other startups to get the investors' attention?
Well, one of the key things that I believe is very important is you obviously don't have the same level of engagement that you have in an online conversation that you will have in an offline one. So that means you need to make sure that that what you do is all about results, is not about the amount of information that you drive. So it's very important to have your camera on. Try to make sure that the counterpart also has the camera on, and you can have that type of feedback loop. So you can have a conversation with that person that you can read some level of feedback. Okay? I think that is very, very, very important to do. Second thing is you need to be in a position where you actually can feel energy. When you don't have the somehow environmental influence of okay, I'm in a room with investors, I'm in a room with an audience. You need to create that for yourself. It's very easy to think, well, I'm at home. I'm in the office or I'm somewhere else. It's very easy to not actually have awareness of where are you or with who are you. So trying to change that mindset and actually use the energy, assuming that you're talking with a bigger audience that the one you can see in the room, it's actually also quite important.
Wow. So, Oscar, please give a piece of advice to startups, something what will help them to succeed.
Well, I think that probably one of the most important things for a startup founder, and in my opinion, one of the hardest, and it's hard because it doesn't guarantee success, but at least what I've seen is almost what I've seen is that every successful person actually has gone through that, and it's the assumption that you have to iterate, you have to change whatever was your original plan. Most likely, it's gonna need to go through changes. And those changes they're challenging because on one side you cannot be absolutely unfocused and change all the time and modify what you're doing every other day, but but you know that you need to be flexible and open to the fact that maybe your plan needs to evolve. Okay, that's a very important thing. It's critical to do that, but at the same time it's critical to do it in a systematic way. So it's not about waking up one day and say, oh, I have this brilliant idea, I'm going to change that. You need to try to put in your company the systems and processes to be able to have objective validation that something is working or not, and just throw your ego and let it like go somewhere else and realize that it's okay. It's okay. Look at every single founder that has been successful. They all change their companies. And what matters is not to be right. What matters is to get things right.
Thank you. Great advice. Thank you very much, Oscar. Hope to see you online soon at our unicorn battles in Asia, in the Oceania. Thank you for being with
Yeah,
us.
definitely. I've had great experience in some of the unicorn battles, so I'm looking forward to the next ones. And congratulations for the great platform that you are building to bring in more people together and to create more opportunities to connect communities and people from different regions.